Hi, it's Peter Schiff. This is Thursday, September 3rd, 2009. Well, another very strong day for precious metals and for mining stocks. The price of gold, I think, was up another $13 an ounce today, adding to yesterday's gain of over 20. Silver prices soared at one point better than 70 cents an ounce. I think we closed up about 65 cents. We traded higher than $16 an ounce. That was a new 52-week high for the price of silver. Gold stocks put in another impressive day. The Huey, the Philadelphia Gold and Silvers, or the Gold Bugs Index, was up about 6%. With yesterday's 9% gain, that brings the two-day surge in gold stocks to 15%. That's the equivalent of the Dow Jones being up 1,400 points in 2 days. Now the question is, why are we getting this surge in the price of gold stocks? What happened in the last couple of days? My take on it is this. A couple of days ago, we had that 200-point drop in the Dow, and of course before that we had weakness in U.S. stocks. We had some weakness in some of the Chinese stocks and some of the overseas markets, and a lot of the traders jumped to the conclusion that, well, if the market is weak, then the dollar is going to be strong, and if the dollar is going to be strong, gold is going to go down, gold stocks are going to go down, just like they did in the 2008 decline. So I think a lot of traders rushed to buy the dollar, to sell gold, to short some of the mining stocks. And when we didn't get that kind of movement, when buyers came into the market instead of sellers, and they couldn't drive the price of gold down, or they couldn't really drive the dollar up, I think the shorts came in to cover. And of course, new buying came in sensing this, and we had these spike moves. But I think, again, as I've been saying in the last couple of video blogs, what this dynamic is showing is that those patterns that we saw in 2008 are not repeating in 2009, that we're not getting this convergence of assets where all assets move in the same direction. But of course, we have a lot of traders and investors who simply look in the rearview mirror. A lot of people bought into the head fake of 2008. A lot of people didn't understand why markets reacted the way they did. And so they expect these patterns to be repeated. They think that if the U.S. market goes down, that gold's going to go down. That if the U.S. market goes down, that the dollar is going to go up, which means commodities are going to go down, which means foreign stock markets are going to underperform. I don't think any of this is going to happen, but certainly there are a lot of people who think it's going to happen. And I think what this is creating is really the classic wall of worry, where people who may understand or know that there are some fundamental problems with the U.S. economy, but it might keep them on the sidelines. People are afraid to buy gold. They're afraid to buy gold stocks, or they're afraid to get out of the dollar because they're expecting a repeat of the 2008 market movements. But again, I don't think that those market movements are likely to be repeated. I think that was a one-off event that is not likely to happen again. If anything, if there is another major decline in the U.S. stock market, it's going to happen with dollar weakness, not dollar strength. It's going to happen with commodity prices rising, gold prices rising, which means the economic downturn that might be happening at the same time will be that much more severe. This is just not going to be more problematic for investors because they're going to see not only the value of their U.S. stocks come down, but the value of the dollars in which those stocks are denominated fall. But American consumers, workers, people that have no money in the stock market, this is going to be more problematic for them because the last time around in 2008, while the economy was shrinking, the strength of the dollar provided a cushion in the form of a lower cost of living. Prices fell. Americans got bargains because of the strength of the dollar. When you reverse that and the dollar is falling, things get more expensive. The cost of living starts to rise rapidly. Food gets more expensive. Energy starts getting more expensive. So the people who are unemployed really feel it because their unemployment checks don't go as far. And even the people who still have jobs, they're going to be hurt because their paychecks are not going to go as far. Also when I was watching on CNBC, I get a kick out of all the so-called experts trying to figure out, why is gold up so much? Why is there this surge? And of course, since they all think there's no inflation and they think that the economy is getting better, they think that gold must be going up for some other reason, having nothing to do with inflation or a problem with the U.S. economy. So they're trying to figure out, and basically they kind of conclude that it's just all a random event, that it's all noise, that it doesn't really mean anything, and they dismiss what gold is saying. One guy, it was funny, one guy on there was saying that he didn't think gold was going to go up very much in the long run because there was no inflation anywhere in sight. but he said that he thought the dollar was weak, and that because he thought the dollar long-term was going to go down, that might be a reason that gold might go up, not because of inflation, but simply because of a weak dollar. Well, they're the same thing. I mean, that's what inflation is. It's a weakening dollar. The reason why inflation causes prices to rise is because inflation debases the value of the dollar. As you expand the money supply, as you create more dollars, the dollars have a lower value. Therefore, you need more dollars to buy things. So prices have to rise to reflect the diminished value of the dollar. For someone to say that the dollar is going to lose value, but there's not going to be any inflation, it is an asinine statement. I mean, it shows that the expert who's making the statement doesn't even have any idea what inflation is. It's precisely because the dollar loses value that prices have to go up. And if you're buying gold because you think the dollar is going to lose value, you're buying it as an inflation hedge. Gold is rising because of inflation, and that's obvious. In fact, I also read a report that the Chinese government is encouraging its citizens to buy gold and silver. Well, of course they are. Why wouldn't they? I mean, they know that gold and silver are going to go up. They know it's a sure thing. How do they know that? Because they're planning on dumping the dollar. They know they're going to try to get rid of the dollar, which means gold and silver have to go up. And they want their citizens to own it. They want their citizens to have real money. They know what's going to happen. It's unfortunate that our politicians and our central bankers haven't figured it out, because while the Chinese are encouraging their citizens to buy gold, we're discouraging our citizens from doing the same thing. We're telling our citizens to put their faith and their trust in the little bits of paper that we're printing, while the Chinese are encouraging their citizens to put their trust in gold. Anyway, that's it for today. Have a good day, everybody. So long.